So here is copper. And JP just noted right there that the old timers say that copper is the economic forecaster of the futures world. And right now, copper mostly chopping around, trading sideways right now. You know, taking a look at this one right now, it's clear that it has one of the best coils out there. This thing is doing this right here. And that's something I always notice, right? I mean, it's hard not to notice that. And, you know, it's mainly chopping around a price, perhaps right here. I think that's the price, actually. That's 215. So it's chopping around that price. And eventually, this is going to release some significant energy. We already have a couple of key levels in here. We have an impulse range to watch, but we could even bring it out. In this case, it's obviously been trending downward this entire time. I think we've talked about this one before. If it gets above this key level right here, it could release some major energy back up. Right? Values up here. Some previous support levels are here. So it could be forecasting a major move up. Problem is, I don't know if we can get above that high right now. We've been trending downwards so much here. Now we're just holding here. And, you know, I think it could easily just dump lower as well. So right now, it's kind of got a coil here that I'd be watching for any false move. So if it tried to come up here and could not get up there, I mean, that false move right there could be a major selling opportunity down. Sometimes these major sell-offs occur as a result of the failed range expansion. It's bulls trying to get the ball and running with it, and they fail. Just look right here. You see this? You see this across the highs here? It tried to go up right there, and boom, you know, it dropped it. Then it came back and just kept on going. You know, that failed range breakout could be huge. You can see how tightly coiled this was here. It looks very similar to what we have going on right now from here to here. Eventually, that just melted right through the lows. But again, it started with trying to push through the highs. Or trading up there and failing, then breaking through the lows and dropping. So this one right here, tightly coiled market. Again, this one has more of a tendency to trade sideways than it does to move, but when it does come out of a coil like this, there's a tendency to move, you know, a good 6 months. You can just see right here from this high to this low, you know, that's June and this is January. So that's a 6 to 8 months right there. You got this move right here and this big move. So that's April to August. So there's, you know, four or 5 months with a continuation lower for another additional, that's 8 months. So this has a tendency to move. So this one, when it does break out, it could be a move of about 6 to 8 months where it just drills lower, which means, you know, if we're dropping right now and we start in November because of election, then 6 months from now it could be somewhere in May to June, and then May to July, where this thing could, you know, continue trending like this. Maybe not that far. I don't know how long it'll take, but, you know, something like that. So we could be looking at somewhere down here. And basically, again, look at the ledge here. This is $2. There's just a big ledge. So if it can't hold that ledge, you re-auction these prices. So you'd probably do that. So that's kind of the longer term view right now. I'd watch very closely. You're gonna know if this thing pushes above 230 and it's a day that is gonna spark movement, because it's gonna be a day where it's a huge move. You know, it's gonna blast through like that. That's the type of day it's gonna take for this thing to break up and start climbing higher. And it's not gonna take, you know, this thing to melt through it or just do something. I mean, the stops are gonna come out. So if it comes up here and can't do anything, it's probably a much better selling opportunity than it is anything else. If it does turn out to be a huge day where it's like this, then there are ways to get in and take advantage of that next. But I think primarily it's had a tough time. It's trying to get anything going above 230. Any move up there I think would be fake, and it would be an easy sell back down, I think. So, yep. Yeah, something to watch out for there. Only one time where we've traded down here in the recent 10 years. So here's 1.8, or here's $2. Here's 1.2. So we've traded that zone here, 04, 05, and we traded it here, 08, 09. So if you can't hold $2, you know, you can go down to 1.2. So that's what I'm thinking here. And then it would probably come right back up. This is what I like about the weekly chart, and I'm just gonna remove, let me hide the fibs. There it goes. So we just have the key levels up. This is what I'm nervous about if I'm a bull. And that's why, you know, I think you see a lot of major players are not committing much up here. I mean, I've been saying for years, just buy the dips, buy the dips, buy the dips. Ever since we got that lower low here. I think so. I think it was the wide-ranging scan. It might have been, or it might have been the reversal. Or both. I'll go back and look. I remember this one right here, this low. I forecasted using the back end of a range here. So basically, just whatever that range was, just the same distance down to here. That's while I was at Nirvana, and that was a big time move. And then this failed lower low right here. After everybody, you know, that was a big recession, right? A big time hit for the economy, for everyone. It's hard for anybody to get in and put money back in the market. There's still people that have not put back money into the market since then. And so who's made money this entire time then, right? It's wild. But here's the new lows, and that's when we knew that we were at least headed back to the recent highs. And if we can get above there, then it was an opportunity to hold as support. And then we saw this start to push, and I was talking about expansion. So you can see how this thing has pushed higher ever since those lows. And now we're holding here, there's 18K. And after a big trend up, you see that we actually formed a decent trading range. And now we're able to see that right there. So this low with the tail right here, yeah, that was a nice low as well. That was the initial part where I think what I remember was saying, okay, I forecasted down to, there was two forecasts, one down to 800 and one down to 6 something. And so the first one hit, and I was like, okay, you know, consolidation. This one here also went. So this one was like when you hit a first one after a major sell-off, you look for the retest of the low. Remember, this is just like we look at intraday. You drop down here and you bounce. So now it's like, okay, the things to look for is a higher low, a double bottom, or a new low. In this case, it tried the higher low and failed, went right through the lower double bottom and went down here and popped back above. So usually, you know, this one right here, it was difficult. I remember looking at this one thinking, okay, are we going to form this and hold? Nope, we run the stops. But then right there, this was a big deal because when you close below that low and immediately close back above it, that's a clean rejection, and you could probably pair that with bullish divergence. So I remember, especially during this time, we were huge with our divergence tools because we had all the data right there. But that's how that performed, and it also did it at the edge of a larger range back here. I mean, look at that. So now you look at this low, right? Boom, 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 and went. I remember right here, this is when I graduated college here. and I was trading for Nirvana here. So I basically started working for Nirvana while I was still in college during that part. And this is right when this major line was being broken and we were retesting it. And so I was used to trading a bullish market. And then as soon as I started working for Nirvana, we started a bear market cycle. As soon as I got on, it was nothing but sell-offs that nobody had seen in a long time. And then the retest of the market, this is when I learned the term kiss of death. You know, so Ed was really big about that word, which the kiss of death and was basically price goes auction through a level, and when it retests, it kisses that level from below, and it's the kiss of death because you're likely going to see a major move. So that's the zone. That's what we still talk about today. And Ed would call that the kiss of death. And so we were super bearish until right here, and that's when I was talking about an inverted head and shoulder. So right here is basically when I started the retirement accounts, and I put all in on this chart back to these highs. And so that was, for some people, an area here to watch. So already, once this happened, we were looking at the home builders. I remember looking at the home builders in 07 and telling everyone, hey, these home builders are all forming topping patterns now. That could be huge. And then all of a sudden, that became a top for the housing market, and the whole thing came out, and boom. And it was all based off of this range, though. But as a young student in the market, and I didn't pay attention to a lot of the headlines. I didn't know what anything meant. I was just using patterns still, the price. Just using price. So to come back out here again and retest those lows, that's the edge of the range. And that's why this move was so good. That's why this move was so good. That's why this move was good after here. So you can see, when you piece this thing together over time, these higher time frame charts, I mean, they're just the same concepts we talk about on the intraday basis. To date myself a little bit, I was in high school right here. I graduated from high school there, UT right here. My first UT football game was a 66-3 loss to UCLA, about right there. Ricky Williams won the Heisman, about right there. I had a class with him that year. So yeah, this is, you can see, I mean, it's crazy when you just zoom out. The same topics and concepts we talk about are here present in the higher time frames. Yeah, it was 66-3. And I sat through the entire thing because it was my first UT football home game ever. And I got a super sunburn that day too because it was scorching hot. Because I stayed the entire game. Everybody else was leaving. They couldn't believe it. But I said, I'm not leaving my first game. Yeah, that was a butt kicking. So, okay. So now we're over here. This is why I said this is why I'd be very cautious now. Let's hide these drawings as well. So now we have this trading range. Or let's just make it across here. And this is the range that we've been using this entire time. And just recently, we've been trading above that range here. And that's why I said, you know, you got to be careful now if you're a bull. Because up here, above these highs, and we see a box forming up here, if it can't continue higher through 2200, then the stops come out here. And what is that, 2120? Yeah, 2120. We've gotten down to 2100. So it's that zone where bulls are keeping bid. The lows down here are clearly 18K. So we know that if they cannot hold above here, you auction back to here most times. You stop midpoint along the way or wherever that key midpoint is. 1981s have been a big time level this year. 1981. 1981 half. There's 1980 right there. So that would be the first major target. If these things couldn't hold 2100. And these things tend to happen, like, for example, at certain times of the year. October can be one of those years, but it clearly isn't happening. You know, major event, like an election cycle, it can happen. If it doesn't happen by then it could happen January. You know, January, those things tend to happen. Just think here, right? There's January right there for you. And then February was a retest of the low, and there we go. That was such an easier time in the market. We were calling these things left and right off of here, and it was so beautiful. But since then, we've gone through, 3 months or so of kind of sideways movement. Actually, 4 months. We've got July, August, September, October. We're finishing up our 4th month of this little nothing range. And that's what's tough. But soon, all of this will be released. Is it downward? Or can they hold it and try again? Typically speaking, this doesn't look very good because the first retest was defended, but it didn't make a new high. Instead, all of these low highs right here have been defended below these recent highs. So if you scroll in again into the littlest little time frame here, now you have this here. So this is the entire width, but then you have this little bitty trading range from here to here. Price went offered there, and since then they've been defending there, and that's 2160. So this is what's kind of happening right now. You have this little impulse range that you can do here as well. So right now we're kind of doing this, and you can just see from a higher time frame perspective, it just doesn't look great. That doesn't mean it can't go up. It just means why buy it up here when it's up here? Great traders don't buy high. They buy low. They buy low. They buy pullbacks. They buy sell-offs. They buy weakness. They buy when nobody else wants to buy. They don't buy up here at highs. Not on the, you just have to put it in perspective. So that's why you see a pattern here where bears have come in and defended. You see lower highs. Meanwhile, you have horizontal support. That gives you a descending pattern. Descending patterns typically bear to the downside, and all of a sudden you're staring 1981 half in the face again because there's clear air down to recent lows. So that's my higher time frame look. It's not a prediction. I'm not guaranteeing we go down. This is what I'm looking for, and we got to see if that happens. And then I'll give the prediction as it's happening, right? Like right now, this is what bears are trying to push to 2100. Right now, that's currently bid. Bears are stair-stepping this thing lower, so the previous week's close offered, and then a retest of the weekly pivot range is being defended. So all of those things point at a retest of lows. And if this thing can't hold above 2100, the stops will come out. And then I will say, hey, below 2100, price goes to 1981 half. That is a trade idea. And that is what I predict if this thing can't hold there. And then once it gets to that zone, now it's phase 2. Do we go down to 1800 or not? Because there's a couple of things could happen. We could trade right back up and then fill this part out as we did before and then work lower. Or we can just sell off in one big swoop. There's many things. So again, I'm an order of operations type of trader. What happens first? If that thing happens, then this is what I'm looking for next. If that thing happens, then I'm looking for these things. So right now, this thing is pointing lower on a higher time frame. You can see 1960 becoming resistance. All this stuff to me, if I were just looking at it technically, I'm thinking that this failed range expansion up here could lead to a move down. So that's just the thoughts here, higher time frame for the ES. I have been of the opinion that if it does pull back, you still have to be a buy the dips. And where is the dip now? Before 1800 was really nicely defended here. But do we go down into the LVN now below that, 1720? That's the next key level below. Do we come into this LVN now and try to hold below 1800, below 1720? That would for me, would be the best case scenario. So you're seeing it happen on this end, where you're above these highs and you're forming this. The best case scenario is for the stops to come out and go to the bottom. And then you take out these lows and trade below it, and then you come back up and go. And now all of a sudden, again, we formed an expanding range. To me, that would be the best case scenario for the entire market, because you're getting a major pullback that the market, quote unquote, needs. How can you go higher unless you entice buyers to come in and defend? You cannot entice buyers up here. You entice it by auctioning lower. by advertising lower prices. And so price would need to come below here, take out these lows. This would be a great value. Big players would come in here, gas it up, and now all of a sudden we're working for a move from 1720 back up to, 220, 2220. That'd be a 300-point move. No, shoot, more than that, 500-point move. That's a big move. So that'd be a pretty decent move. That would probably be the best move right there, is down and then up. And then when you look up, we're still holding at highs and we're still expanding this range as we have been the entire time. So that's, oh, absolutely. That's a good one. You know what? I'll archive this one and I'll put it in the premium analysis so that we have it there. So just a couple of thoughts there for the higher time frame, longer term stuff. Because again, there's nothing that says we can't go up, because I do think if price comes down, it's going to be a buying opportunity at multiple levels. 1981.5, I almost guarantee 1981.5 will be a first test buy. I don't know how far, but it will be, because it has been. And then once it gets below there, I know that you're probably going to get some type of ripple off of 1800 to get some late bulls in, and then you run them into 1720 or something perhaps. So there's going to be spots here where bulls are going to come in, but down here it's just, that is an ultimate area. And I still think that the trend is up. So even if we do rotate down, it's still a buying opportunity. I'm not of the opinion that we're going to, croak. Not yet. Right? But after so much trending up, I mean, at some point you have to have a meaningful pullback. And right now, we've had a couple of tests near on this line. I mean, how much farther do we come back? We at least got to get into this zone. So longer term thoughts for the ES there. Okay, so here's the NQ on the weekly time frame. And you can see here, very bullish so far. Very nice structure. Here's some recent lows around 1,000. They held it down there. They gassed up the tank and boom. Big squeeze. Gassed up the tank and boom. Gassed up the tank, boom, boom. And it just kept on going. Now look at it. It's got a big old range up here. We've had a bullish slope since 09. I mean, that's pretty steep. Very clear range. Guess I can draw it a little better. And right now we're at the top end of this range, kind of a cycle high, if you will. We're moving up like that. So at some point we may come back down. Here's the HVN, so we're kind of trading like this. So somewhere in this zone, 4,400 is the area to watch on a quick rotation lower if it were to come down. So here it is. I mean, this is what I've been talking about before. We kind of have this expanding pattern, and we're near the top end of the range. If I draw it a little better there, it's still not that good. But yeah, there it goes. So you can see a very nice pattern. This is what markets do. That's what markets do. I mean, they go up, they come down. They run up above the previous highs, and they fade down below the previous lows, and they fade back up above the highs, and they fade down below the lows, and they fade. And that's what the markets do when they find a range where they're just trying to establish facilitation of trade. That's been the case over the last 2 years. So we have 2 years of this trading behavior. This was the trending move. It ended here. That was the close of the year. And there's 2015, and here's 2016, and we've been chopping. So we're at the upper edge of this range. And again, that's why it's hard for professionals to buy and put money to work. As a matter of fact, look, this is the highest high that was just reached yesterday. The highest high that we've seen. And before that, it was the highest high we'd seen here. And before that, it was the highest high here. And before that, it was the highest high here. And before that, So you can see, this is what I talk about all the time. At times, this is almost like advertising. When the market stays up here, It's almost like advertising to the general public who doesn't pay attention to the markets. Every day they casually look at the headlines or they casually look at CNBC, and all they hear is, you know, the NASDAQ's at an all-time high. It's at an all-time high. NQ's at an all-time high. All-time high. It's at an all-time high. It keeps pushing new highs. All-time closing high. All-time high. It's at a 20-day high. High, high, high. So then everyone's like, whoa, this thing must be very strong. I'm going to get in because I don't want to get left behind. Every day it says new high. Meanwhile, they don't know that it's really gone nowhere. And all those advertise, somebody's selling to them. So you're having people that are distributing up here, and eventually those longs don't get paid. The stops come out below this low, which is, you know, 47.20 or wherever, and then all of a sudden, boom, you get a move back across the range. So, or at least downward within the channel back toward an HVN. So right now, that's why that's the kind of the inner talk that goes on in my head sometimes when I'm looking at this stuff is like, this isn't the best spot for me to be in long term. I'm much more comfortable down here off these wiki lows to buying than I am up here, because where is it going to go from here? You got to gas the car up. Right now, there's no gas up here. It's got to come down to fuel up. And then down here, there might be a little bump. If not, then down here's the bump. If not, you know, you got to keep going down the ladder. And so that's why up here, you got to be careful. You know, this Fed stuff has been in place for many, many years now. The entire, I mean, here's the crash. I mean, this entire time, it's been Fed held up by the Fed central banks. At some point, when they give it up, I mean, that's going to cause the market to rotate and correct. Maybe, you know, a hike or whatever the case is, something's got to give. If not, the market will continue at this pace until proven otherwise. But it's just hard to buy up here. So this is the long-term look. It's just that we're up here near some high highs. I mean, yes, we could still drift up a little bit more, but I'd be watching for the ultimate failure below 4,700 or 4,600, because that could really trigger a big move. And if it does, again, I still think it's a great buy. It's a great buy right back up. So the perfect buy would be somewhere in this LVN at 3,800 if it got there. I mean, it only took, you know, a month and a half to go that distance last time. It could do that again if it really wanted to. But so we'll see. I'm just cautious up here longer term. But I think it's a good idea to look at these things from a higher time frame perspective. Here's the CL. Well, we talked about with CL before. We haven't looked at it in a while. We've looked at this one quicker than we have some of the other ones in the weekly. But one of the things I talked about is just this range. So you have trading in this range. You have trading just outside of it and trading just up above it. So earlier, that's why I mentioned here that if we break up here and we can hold, this thing could finally try to make its way up. And then you do this. That's what I thought was likely to happen once we broke out of this range. And that still could be the case. But that's kind of the higher range. But this is the trading range we've been in for some time. The highest highs are up here, about 62s. Lowest lows are down here by 26s. And so that's our range at the moment. And I think we're going to make a move for one of the edges of this range. That's why I mentioned earlier, if you can get above 52, there's clear air to 62. But the first test at 52 was rejected. And it left behind a high at 52.22. The 25, the R25 for the week was 52.21. It slammed right into it and pulled back. And so now it's pulling back a little bit more. But it may not be done. So I still think this is the range to watch. Now, if you bring this out even longer term here, you'll see here the last time we were near these lows were back here, beginning of 09. That's why you see kind of an LVN there. You can bring this over this way. You can see how price traded below it, held and squeezed above it, came all the way back to it after this. So when I built that extreme reversal pattern. I built it mostly in here and tested, built and tested, and we deployed it in here. And so this thing cleaned house in here and had us in at every single pullback, all the way up. And we were actually long at the highest high before it pulled back and got in, and we took our gain. And then from there, we turned it off on the long side and flipped it to the downside because it was long only. So that strategy, I made it long only for this move. And then we flipped it and did short only on this move. And that's about as good a market as you've ever seen for volatility ever in crude oil. And I took it for granted, the move that went up and down, and I never really looked at it. It was like a video game to me. I know people at the time had never seen these prices, and yet, you know, we're trading automated systems that are just making money, and I was just looking at the bottom line every day. I mean, it was a 5-figure net gain every single, trade on that account. And so it just boom, boom, boom. It was a huge move. But we have never seen anything since. And then we got so tightly coiled in this range that when the stops finally came out, we knew there was not much structure below 80, 85. And then, the move happened to here. Now you can see that there's lows, price tried to hold outside, and now it's back up. So I think generally speaking, crude oil is trying to make its way back up. Doesn't mean we're going to recover and go way up here just yet, but it's happily trading in this range right here. Well, I don't know if they're happily trading, but it is trading in this range. At some point, we're going to try and get up into the 60s. If we can get above 60, then there's a retest of 80. And you can see there's some LVNs to fill in. So here's the chart. So here's the LVN, here's an LVN, here's an LVN. This is an HVN, HVN. So in order to fill some of this in, you'd have to trade there a little bit. That's what I mentioned earlier. I think we can get up here and trade from 52 to 62. If it pushes up there, it might be trading here from 62 to 72. And it would have to be a clean market structure up. And so right now, that's kind of what's happening. But we might still be in this area for a while before we do that. So this one is one of those that it's harder to tell. I know, generally speaking, I think we're going up, but it could definitely take its time. And we've already been in a key range here. So it's not until we get outside these edges before we do anything, but this was such a volatile sell-off that it's left behind a huge wide range. And that's why we're only using a very tiny portion of it, a third of it right now. So on a longer term sense, this one here is still trading range bound. It could continue that way from 26 to 62. At some point, I think it'll try to make its way from 52 to 62 and utilize that range. But does it rotate down first before that happens? This one's harder to tell on a higher time frame. Yeah, I'm going to put them all together, Max, the weekly ones, and just talk about the weekly discussion. So these will all be there in a mashup. This is 6E on the weekly. Remember the trading range we have from here down to here. Here's a little tightly coiled pattern. We were talking about a likely flush coming out back toward the lows. Similar to this move, that's currently in effect. So this one's still in effect on the way down. And once it gets out to this edge down here, that's the only time I would consider an opportunity to fade it back up toward 112 and maybe back to the highs. So right now, this thing's still going down. Nothing really changes from there just by going to the weekly. But you can kind of see the overriding pattern here over the last X amount of years. I mean, here's 118s. So you can see this zone right here has been support, or around that area, went offered and defending. So down here would be a great area to buy it back up, and whenever price decides to reestablish above that zone, you get the squeeze back up. So here's gold in the weekly. What I loved about this one to begin the year is that we were forming some accumulation down here, a rounded bottom, and we were also at the edge of a prior range. So we had a key range from here down that we had, and so that made for a nice level. So it was failed range expansion. We're at the bottom of channel. I mean, it had plenty of accumulation, and that's why we were so bullish that to begin the year, and it rewarded us nicely. And then we were able to identify, the range that came afterwards, etc. And you can see after this expansion, boom, it forms a little expanding range this way. That's how it trades the range and facilitates trades. Then it pushes higher above that range here. That's 1300. Then it tries to hold, and clean market structure suggests that we need to break higher. Failure to hold 1300 will rotate this thing back toward 1203, 1208.30, which is these lows. And you can see we're kind of on our way down. We're sitting midway. So that's kind of how this thing is played out on a weekly chart sense, to kind of condense everything that we've been looking at all year. Breaking below 1300 was very significant. That 1300 level has been important this entire time. I mean, you can see over here where this thing dropped, boom, got below 1300 and then chopped around 1300 and actually formed a little coil around it. And then went offered, came back, defended, dropped to new lows, failed to get new lows, comes back to 1300, and then uses it here. So you can see 1300 is the level. That is the major level. And you can also see that 1302.70 is composite VPOC on the weekly time frame. So that is value as well, 1302.70. So I can bring this out. Right click here, add a price level. There it is. There's CVPOC. We'll make it pink. There it is. Look at 1300 here. That's 1302.70 right there. That's basically 1300, right? So there it is. Higher, defense, and rally. And then comes back to that zone and reverse chops around it, getting a little tight coil, offered here. So we're back at it, right? We're trading. So if it cannot get back above 1300, it retests 12. So the idea here is that we're basically chopping around 1300. So it's a fade new highs, fade new lows type of thing right now. It's a round value. You can see a D-shaped profile here. And it's right back in the range. This one's kind of tough. I mean, because you have this range from here to here. It formed this range and tried to go lower. It failed, so it's been working its way up this range. So literally, we could trade between these lows, just call it 1175, to these highs, say 1400. And now you can go 1400 down to 1175, 225 points, and that's your trading range. So from a higher time frame perspective, I see this range just going to continue to chop around it. Maybe we might come down here, but it would be a buy back up. We might come up here, but it'd be a sell back down. And that's kind of what we're trading. So it's not as exciting as some of the rest. Now, if we got above 14, then things get very interesting. Because here's this range down here, and before we had a range up here. There's an LVN right there, so if you got above that zone, you re-auction back toward recent highs. 18K is right here with the absorption. Doesn't this look like the YM today and yesterday? It looks just like the YM. Price came up to 18,185, rejected back below the previous close, or previous high. Here's 18,170, and there's a sell-off. See, it happens in all time frames. Very, very nice up here. Very clean. Nice LVN. So right now, unfortunately, it looks like gold is just going to continue to chop around a little bit in this range. But that range has been plenty for us this year, right? It's been a fantastic range to trade. So to continue to trade in that range is good because it's expected. We know what to expect. We have enough range. But again, it might take a while for one of those edges to be engaged again. So we'll keep an eye on this one as we go forward. Here's the YM. The YM looks very similar to the ES. So this one, you already know what I'm going to say. I'll just keep it brief on this one, but here's recent support, 18.2, that's recent resistance, trading in this range. Price tried to hold outside of it. Here's the retest, there's the failure, it went back here, and now all of these days have been used to absorb. Any prices above 18.2 have been absorbed as high as almost 18.4. And eventually, if they cannot get prices back above 18.2 here, I think you see at least a rotation downward toward this key level here, that's 17K. Perhaps you do this and then you eventually do that. So that's kind of the approach that I would think would occur. So right now you have to continue to watch up here. You can see clearly who's positioned where. Bears are clearly winning the short-term top. Bulls have been overall defending here, but they like pullbacks, and we haven't seen much of a pullback. We had one day. This is 1 week, but remember, it was really just one day. So 18.2 right now could open the door to something into 17. And then 17, we could see a bounce back up on a retest of this low, back toward 18 or 18.2, right? You know, because the market likes to distribute and trade in a range. This is the prior range. So you got to trade that range first. So the first move is from 18.2 down to 17 this way, then perhaps that way, and then we'll see what happens from there. So this one right here, very similar to the ES. Right now, previous close clearly being defended. There it is right there. That's the previous month's close, previous month's high, previous month's low. So you can see right here, this high is just barely above that high. So failed new high on a week-to-week basis there in a downtrending market. I always say that usually leads to a big sell. So again, we got 2 more of these bars to form before the election day comes. So we got to finish this one out this week. It's only Tuesday. We got to finish one out next week. And then we got to finish one out here. And then, so we got a couple more weekly bars, and then we should see some fireworks.